Hey, I want to ask you something. When was the last time you sat down with someone, not to file your taxes, but to actually strategize about them? There is a big difference between those two things. And for most high net worth families, the gap between what they're paying and what they could be paying, or should I say not paying, with the right plan, it's very significant. We're not talking about loopholes. We're talking about strategies that exist specifically for situations maybe like yours that most people simply never hear about. I'm Steve Martin, Managing Partner and Wealth Strategist here at SRQ Wealth, where we help families find their freedom by simplifying their financial lives. The first point I want to go over, it catches almost everybody off guard. It's called asset location. I didn't say asset allocation, I said asset location. That missing AL, it makes all the difference. Sorry for the dad joke. Asset location is about which account type is holding your investments. Because the same portfolio held in the wrong accounts can create completely unnecessary tax bills every single year. High dividend stocks could be in a taxable brokerage account. Bonds generating interest could be outside of a tax sheltered account. These are the kind of things that just quietly cost you. And the fix, it's often simpler than people think. It doesn't require changing your investments. It requires reorganizing where they live and how they're used. Now here's your second point. Roth conversions. I know you've heard it before, but I'm going to be direct. This is one of the most powerful tools available to wealthy families right now, and most people aren't using it. The idea is that you pay taxes today at a known rate, and you let that money grow completely tax-free from here on out. Sounds simple, but the strategy behind it, knowing how much to convert from a regular IRA to a Roth IRA, in which years, at what income level, that's where the real value is. And done right over time, we've seen families save hundreds of thousands of dollars. Done wrong or not at all, that opportunity is just gone. Think about it. How much could several hundreds, thousands of dollars be to your children and grandchildren if we compounded it over a few decades? It's a 7-digit number. And here's your third point. And this one really hits close to home for a lot of our clients. It's charitable giving. If you're already generous, thank you. And many of you are. I want to make sure that generosity is working as hard as it possibly can. Because writing a check to your favorite charity, it's a beautiful thing. Writing that check through a donor-advised fund in a high-income year, taking the full deduction now, and distributing to charities in your own timeline, that's the same generosity, it's just done smarter. It's one of the simplest strategies that we implement. We call it a charitable checkbook. You see, once it's funded, you may actually start looking for opportunities to use it, to make donations. It's fun, it's effective, and it almost always comes as a surprise that nobody had brought it up to you sooner. So here's what I want you to take away from this. Tax planning, it's not a once-a-year conversation. It's not something that can happen in April when the damage is already done. It's an ongoing strategy, and for families with real wealth, it's one of the highest impact conversations we can have. And if you're not having it, find someone who will have it with you. Hey, I'm Steve Martin, and you've just taken your next step on your journey to true wealth. Do me a favor, hit the like button. It really helps us get this content in front of more people that could use it. And if this is the kind of content that's useful to you, hit the subscribe button. We put this out every week. You know, failing to plan is simply planning to fail. You don't have to do it alone. You just have to do it with an advisor that cares enough to do it for you. Hey, we'll see you next time. God bless.